Buy or sell the Israel ETF. First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So we have Israel here in the stock markets, and this one is in the Middle East. 17% here from the 52-week low. And we have seen a minus 10% pullback, which is like textbook correction. By the way, you can now get access to all the educational material here by just going to this website. So let's look at the charts here for Israel. EIS is the ticker. The nice thing here is that we have these rise, decline time cycles. They have been pretty darn reliable in sending signals to go long and also short. We see here that this is the middle of the time cycle, and we do have the expectation now of a declining phase extending all the way into late 2023. So these are very big picture time cycles, but they have shown themselves to be rather reliable. Even more interesting for Israel is that we see these smaller time cycles as well. So this market definitively has a thing for cycles. We have seen a sell-off here, as we have seen across many stock markets. We pulled back here to the green 50-week moving average, but we did break it. So let's go to the daily data points. So the issue here for Israel is that we have slipped below the red 200-day moving average. So let's just draw some lessons here from history, okay? So let's draw in some lines. So let's look at the previous times. We tested it for support, and that moving average worked really well as a time to go long. It also has been a good time to add to a short position. Like here, we faced rejection, and it was a good short. Here as well, pretty clear rejection of the red 200-day moving average, and it was a good short. Okay, so that's how this security has behaved in the past. Guess what? Here as well, the 200-day moving average resistance means it's a nice risk-reward opportunity for a short, meaning to go bearish. Here we find support at that moving average and get a nice rally. But you can see here that multiple days now in a row, we have seen this pretty clear resistance. So let's draw it in, boom and boom. And here are the short sellers in action. So I do think that, the more bearish take would be that as long as this holds as a resistance level, it is a place to go short. Similar to how if we have support at the 200-day moving average, boom, 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 then we go long because we didn't have a nice stop level. And now the bears have a stop level for their short positions. So as long as this holds as resistance, then yes, there's more reasons to be bearish than bullish on the technicals here. And when we look at these additional indicators, long term, we have seen that the low end of our RSI, if we zoom back, it's been a good risk-reward opportunity to enter bullish long-term positions. Like here as an example, and also if we go further back, like here on the RSI, which also formed a key low here on the price itself. So the low end of RSI, it's been a good time to enter a bullish position. But we are not there now. That still is some distance down. Looking at the daily data points, then we are bouncing now from an oversold level. So there is the possibility that that will trigger just some basic mean reversion. Could possibly trigger enough mean reversion to break out above the 200-day moving average. It is possible, but we have seen in prior time cycles declining time phases of those time cycles for Israel. There usually has been more selling left. But at least we do have a clear line in the sand here for a bearish position. When we look here at the seasonality for the country's stock market, over the last 5 years, we do see here a pretty clear weakening here in seasonality. from January to February to March. So the seasonality here is bearish over the last 5 years. Over the last 10 years, then we do see that February is a bit strong, but March, even though it closes higher 67% of the time, there usually is a loss. And looking at all the data, then we do see that January is weak. February is, there's some strength to February. March and April are strong. So there is a conflicting message here between the long-term seasonality and the short-term seasonality. So over the last 5 years, it's been very clear that the coming months are bearish. Here is FinWiz. You could argue that a bit of a megaphone pattern is developing. Yeah. Let's look here at a comparison between Israel and America. So we do see that from a price earnings perspective, Israel is well, America is minus 11% below price earnings wise, but both are richly valued. Looking at the holdings, so Israel to the left and America to the right. And you do have quite a few stocks, Israeli stocks here that are also listed in America. So here is the sector breakdown. So Israel is very heavily tilted towards finance and technology services, while S&P is much more evenly distributed, diversified. From a market cap standpoint, however, Israel is way more diversified, of course, but that is no surprise because the SPY is a large cap index. Okay, so let's jump into the correlations. So looking here, long term, we have a 96% with the S&P 500, which is America, 38% with gold, and 83% with crude oil, and minus 56% with the dollar index. Short term, 88% SPY, 32% gold, 50% oil, and 70% positive with the dollar index. So let's look at let's just look at the S&P 500. What is happening there, just quickly. Okay, let's look at the SPY because there was a decent correlation with Israel. Okay, so looking here at the daily data points here for the SPY, we do have a similar setup in terms of the 200-day moving average. So we have resistance at the 200-day moving average. So that is a level where the bears are going to add to their short positions or initiate short positions. Similar to how you buy support at a moving average when you are a bull. You just flip the logic. So yeah, I think that as long as we stay below the 200-day moving average, then the bears have reasons to feel confident. Because we did see a pretty ugly break in here of that moving average. And beyond that, we do have a bunch of other moving averages now that are on the way down. So the 100-day moving average has broken, turning negative, and also the 50-day here is quite clearly negative. And those are also levels that can offer resistance in the future and be interesting places to initiate shorts. So to sum up my take here for the Israeli stock market, I think that there's a setup here on the technicals that is the inverse of the logic we use when we buy support at a moving average. So yeah, the technicals are bearish, but there is a potentiality that due to the oversold levels, we recently saw that there could be some mean reversion that breaks the resistance level. That's possible. But longer term, we did see that Israel is very affected by these major time cycles. So it's very common for it to have these very substantial pullbacks, even within a global secular bull market. Looking at the fundamentals, this is still, notwithstanding the pullback, a very richly valued market. very hilted, very. Well, there's a lot of gravity here in the financial and tech stocks, and those are sectors that can be more volatile. It would be very different if we had major exposure to utilities as an example, but we didn't see that. In terms of seasonality, it was messy. Short term, definitively there's reasons to be bearish actually, but then long term, we had a conflicting message. So yeah, but taking it all together, I think there's more reasons to be bearish than bullish here, as long as we have that resistance level on the 200-day moving average.